Hello everyone, we are from the Samsami FX channel. Every 4 years, Bitcoin goes through an event that the entire crypto market talks about. The Bitcoin halving. New Bitcoin entering the market gets cut in half. And almost immediately, people start saying the same thing. Bitcoin is going up because of the halving. But here's the problem. If the halving automatically makes Bitcoin go up, why doesn't Bitcoin simply explode in price every time the halving happens? And if the halving isn't the whole story, what actually moves Bitcoin? Let's break it down. What actually happens during a halving? Let's start with the basics. A Bitcoin halving is not a government decision. It's not something the Federal Reserve announces. It's built into Bitcoin's code. Approximately every 210,000 blocks, the block subsidy paid to miners is cut in half. Bitcoin.org describes the halving as part of Bitcoin's predictable issuance schedule, alongside the network's 21 million coin supply cap. So when a halving happens, fewer new Bitcoins are created. But here's the part many people misunderstand. A reduction in new supply does not automatically mean higher prices. Why? Because price doesn't depend on supply alone. Imagine there are fewer new Bitcoins entering the market, but investors suddenly don't want to buy Bitcoin. What happens? The price doesn't have to go up. Now imagine the opposite. New supply is falling, while demand is increasing. That's a completely different situation. This is why the real question isn't simply, did the halving happen? The better question is, what is happening to demand? Because Bitcoin can become more scarce, while its price still falls. And this is where things get much more interesting. Here's a perfect example. Bitcoin's 2024 halving received enormous attention. But Bitcoin's story in 2024 wasn't only about the halving. Something else had already changed. The United States had approved spot Bitcoin exchange-traded products in January 2024. That gave traditional investors a new way to gain exposure to Bitcoin through regulated market products. So suddenly, the Bitcoin market had another potential source of demand. And this creates an important lesson. Bitcoin doesn't move because of one story. It moves when multiple forces begin pointing in the same direction. Now we get to the part many Bitcoin traders overlook. Liquidity. Think about it this way. Bitcoin can have an incredible story, but if investors are becoming more cautious and financial conditions are tightening, risk assets can struggle. Interest rates matter because they influence the cost of borrowing and the attractiveness of different investments. When financial conditions become tighter, investors often become less willing to take aggressive risks. When conditions become easier, risk appetite can return. This is why professional investors don't only watch the Bitcoin chart. They also watch the broader financial environment. And here's something even more important. Markets don't only trade what is happening today. They trade what investors expect to happen next. Imagine investors believe interest rates could fall in the future. They don't necessarily wait for the central bank to cut rates. They may start positioning before that happens. The same thing happens with Bitcoin. Sometimes the market moves before the headline, before the official announcement, before the data. Because traders are constantly trying to price in the future. And that's why the headline isn't always the reason for the move. Sometimes the real reason is a change in expectations. Now let's talk about the biggest argument used by Bitcoin bulls. Look at the previous halvings. Bitcoin went through a halving and eventually experienced massive price increases. That's true. But correlation doesn't automatically prove causation. Reuters noted that although previous halvings were followed by major Bitcoin rallies, there were many other possible explanations, including monetary conditions, speculation, and changing investor behavior. So the correct conclusion isn't, the halving makes Bitcoin go up. The more accurate conclusion is, the halving changes Bitcoin's supply dynamics, while many other forces determine how the market responds. So, what should you actually watch? Before making a Bitcoin trade, build a simple checklist. First, market structure. Is Bitcoin trending up or down? Second, liquidity. Is money flowing into risk assets or leaving them? Third, interest rates and monetary policy. Fourth, the US dollar. Fifth, institutional demand and Bitcoin investment products. And finally, price itself. Key levels. Volume. Support. Resistance. Because sometimes the most important signal isn't what the news says. It's how Bitcoin reacts to the news. And this leads to one of the biggest mistakes traders make. They trade the narrative. They hear Bitcoin halving and immediately become bullish. Or they hear interest rates and immediately become bearish. But markets aren't that simple. The same piece of news can produce completely different price reactions depending on what the market already expected. That's why instead of asking, is this news bullish or bearish? Ask, how is price reacting? So, is the Bitcoin halving important? Absolutely. It reduces the rate at which new Bitcoin enters circulation and reinforces Bitcoin's predictable supply schedule. But the halving isn't a magic button that makes Bitcoin go up. The bigger picture includes supply, demand, liquidity, interest rates, institutional flows, market expectations, and investor behavior. So the next time someone tells you Bitcoin is going up because of the halving, ask one simple question: what's happening to demand? Because in the market, supply is only half of the story. If you found this useful, subscribe for more Bitcoin and market analysis.